Bitcoin Christmas Rally. It's that festive time of the year, and Bitcoin seems to be gearing up for its own version of holiday cheer. Investors are catching the holiday spirit, and there's a palpable buzz in the crypto market. What's driving this? What's going on? Is this even normal? Hey crypto enthusiasts, today let's delve into the intriguing phenomenon, the Bitcoin Christmas Rally. What is the Bitcoin Christmas Rally? The Bitcoin Christmas Rally, also known as the Santa Claus Rally, is a festive phenomenon that's got the crypto community buzzing. From late December to mid-January, there's a seasonal pattern where Bitcoin's price tends to jingle all the way up. But here's the scoop. It's not just a crypto thing. This trend mirrors the Santa Claus Rally we see in traditional stock markets. You know, that special time of the year when stock prices often get a seasonal boost during the holiday season. It's like Santa's spreading his cheer, not just in the financial streets, but in the crypto corners too. In other words, it's a mix of the positive sentiment that comes with the season, coupled with the traditional Santa Claus rally possibly making its way into the crypto sphere. As the year winds down, investors might be contemplating diversifying their portfolios, adding a touch of Bitcoin magic to the mix. But of course, a word of caution. Remember that the crypto market is known for its volatility, and past trends don't necessarily predict future outcomes. So, let's unwrap the potential reasons behind the Bitcoin Christmas Rally and explore whether this year will bring us some crypto gains. Will there be a Bitcoin Christmas Rally in 2023? The financial market is eyeing the potential for a substantial market rally this year, and here's why it's got the community buzzing. A perfect storm of factors, including a potential surge in institutional involvement, newfound regulatory clarity, and a temporary upswing in microeconomic conditions. What more could give the optimism? Just recently, the Federal Open Market Committee, or FOMC, wrapped up its second-to-last meeting for 2023, and the verdict is in. They're keeping the current interest rates intact. Now, what does this mean for the broader market landscape? In finance, U.S. inflation has taken a significant dip, moving from a high of 9.1% back in June 2022 to its current rate of 3.7%. A substantial part of this decline is credited to the Federal Reserve's assertive stance on interest rate hikes. In fact, their actions have pushed the federal funds rate to a range of 5.25 to 5.5%, hitting its highest level since 2001. Yet, interestingly, when you zoom out and consider this in the broader historical context of the last century, it remains relatively moderate. Now, the big question. How might these dynamics pave the way for a market rally? Despite the undeniable success of this campaign to rein in inflation, a lingering concern looms over the prospect of an impending recession sparked by the prolonged period of elevated interest rates. As a result, the Federal Reserve seems to be adopting a more cautious stance in navigating the delicate landscape of inflation management. There are indications that the Fed might exercise restraint, showing prudence in further interest rate hikes. This nuanced approach underscores the Federal Reserve's careful balancing act, a fine line between curbing inflation and safeguarding the broader economic panorama to prevent any unforeseen downturns. As this shift unfolds, there's a palpable anticipation that it could potentially bolster market sentiment and set the stage for a market rally as we approach the end of the year. The impact of institutional investment. The big story. The last bull market, where we witnessed some jaw-dropping price spikes. Now, what fueled this crypto frenzy? It wasn't just wild speculation driving those price jumps. Oh no, investor confidence was through the roof, and big shots from the financial world started eyeing Bitcoin with newfound interest. Major institutions and hedge funds saw Bitcoin as more than just a speculative gamble. It became their go-to hedge against inflation and a potential store of value. Household names like Square, SQ, MicroStrategy, MSTR, and even the tech giant Tesla, TSLA, jumped on the Bitcoin bandwagon, making heavy acquisitions for their corporate treasuries. But these moves didn't just make headlines, they reinforced a shifting narrative around Bitcoin's role in the financial landscape. But wait, there's more! The introduction of futures cryptocurrency ETFs and funds, providing institutional investors with a smoother entry into the crypto market, makes things even more interesting. Imagine the floodgates opening for these big players, giving them more accessible avenues to join the crypto party. A recent Celent survey revealed that a whopping 91% of institutional investors are chomping at the bit to dive into the world of tokenized assets. And guess what? The upcoming season might just witness an even more massive influx of institutional capital into the crypto scene. Now, why is this happening? Well, according to the savvy researchers at EY Parthenon, institutional investors are believers in the lasting value of blockchain technology and crypto assets. Brace yourselves for substantial digital asset investments in the pipeline over the next few years. The institutional wave is hitting, and it's making some serious waves in the crypto waters. But that's not all. Picture this. The potential approval of the first US-based Bitcoin spot exchange traded fund, or ETF, is on the horizon, and JP Morgan is dropping predictions left and right. They're betting on it happening before January 10th, and the excitement is palpable. Imagine the impact on the economic landscape. And the recent buzz about the possible approval of BlackRock's ETF application sent shockwaves through the crypto world, pushing Bitcoin's price to a cool $35,000. If this approval becomes a reality, we might be in for a temporary but electrifying surge in the crypto market. The impact of regulations. Back in 2020, as the cryptocurrency market kicked into high gear, regulators worldwide couldn't ignore the buzz. Some countries went for the ban hammer, while others opted for a more nuanced approach, crafting regulatory framework to keep a watchful eye on digital assets. Fast forward to 2021, and the spotlight was on the US regulatory scene, especially the SEC's take on cryptocurrencies. That year witnessed major regulatory shakeups, with nations around the globe laying down precise legislative frameworks governing everything from cryptocurrencies to ICOs and DeFi platforms. The push for centralized bank digital currencies, or CBDCs, gained serious attention. The European Union stole the show by enacting the Markets in Crypto Assets, or MiCA regulatory framework, ushering in a new era of comprehensive crypto regulations across the region. But that's not all. The legal saga continues. In a game-changing moment, a U.S. circuit judge gave Ripple a legal nod, affirming their compliance with the law regarding XRP sales on public exchanges. This marked a victory for the entire cryptocurrency sector, sending shockwaves through the legal landscape. The judge dropped the gavel, making it clear that Ripple did breach securities laws in its dealings with institutional buyers. However, members of the U.S. Congress are rallying behind spot Bitcoin listings, urging the SEC chair to give the green light. The SEC threw down the gauntlet, launching major lawsuits against crypto giants Binance and Coinbase. The outcomes of these battles might be up in the air, but one thing's for sure: they're set to bring a much-needed dose of regulatory clarity to the crypto landscape, shaping how these digital currencies are governed in the USA. And guess what? The legal showdowns might not wrap up by the year's end, but any noteworthy updates in these legal sagas could send shockwaves through the crypto market, potentially triggering a price surge. Talk about suspense. But fear not, crypto enthusiasts, there's more on the horizon. The crypto community is on the edge of their seats, eagerly awaiting the possible debut of spot Bitcoin ETFs, better economic indicators, and crystal-clear regulatory frameworks. With all of these positive vibes, the crypto market seems primed for an action-packed holiday season, and whispers of a Santa rally are making the rounds. Stay tuned, hit that subscribe button, and join us as we navigate the twists and turns of crypto, speculate on market movements, and gear up for what could be an unforgettable season in the crypto space. Bye for now.